Hello everyone. Today we will learn about Reserve Bank of India. The Reserve Bank of India was established on April 1, 1935, in accordance with the provisions of the Reserve Bank of India Act 34. It's a statutory and non-constitutional body, and the central office of Reserve Bank was initially established in Kolkata, but was permanently moved to Mumbai in 1937. The central office is where the governor sits and where policies are formulated. Though originally privately owned since nationalization in 1949, the Reserve Bank is fully owned by the Government of India. RBI is headed by the governor, and the current governor is Sanjay Malhotra. The governor of RBI is assisted by 4 deputy governors. The first governor of the RBI in 1935 was Sir Osborne Smith. The first governor of RBI in independent India was C. D. Deshmukh. Now RBI is not an autonomous body. According to Section 7 and Section 58 of the RBI Act, the Government of India can interfere in the working of RBI. According to Section 7, the central government may from time to time give such directions to the bank as it may, after consultation with the governor of the bank, consider it necessary in the public interest. According to Section 58, the central board may make regulations consistent with this act to provide for all matters for which provision is necessary or convenient for the purpose of giving effect to the provisions of this act. RBI is the controller of credits created by banks. It controls the credit loans through 2 methods which are known as credit controller. These are quantitative method and qualitative method. Quantitative methods includes repo and reverse repo ratio, cash reserve ratio, CRR, statutory liquidity ratio, SLR, marginal standing facility, MSF, standing deposit facility and bank rate. Qualitative methods include rationing of credit, regulating loans for consumption purposes, variation in margin requirements, moral suasion and direct action, etc. Refinancing. Refinancing occurs in India when government securities are further utilized by commercial banks to get a loan from RBI. Next term is repo rate. Repo rate is the rate at which banks are availing refinancing facilities from RBI. Currently, the repo rate in India is 6.25% per annum. Full form of repo is repurchase option or repurchase agreement. Cash reserve ratio, CRR. CRR is the average daily balance that a bank is required to maintain with the RBI as a percentage of its demand and time liabilities. Total deposits of bank. The current CRR is 4%. In times of inflation, RBI increases the CRR, and in the time of slowdown or recession, RBI decreases the CRR. It is known as tight monetary policy, and when RBI decreases, it is known as expansionary or liberal monetary policy. Statutory liquidity ratio, SLR. Every bank shall maintain in India of its net demand and time liabilities total deposits of the bank in the form of cash. Currently, the SLR is 18% in India. There is an upper limit of 40% for SLR, and there is no lower limit. Next is Standing Deposit Facility, SDF. It is the rate at which the RBI accepts uncollateralized deposits from the banks. SDF is implemented by RBI from April 2022 onwards, and the current interest rate of SDF is 6. Next is Fixed Reverse Repo Rate. The interest rate at which the RBI accepts deposits from the bank against the collaterals of government securities. Currently, this rate is fixed at 3.35%. Next is Open Market Operation, OMO. Open market operations are the operations conducted by RBI, under which it purchases flash sale government securities to inject liquidity or to absorb liquidity from the banking system. It generally sells government securities in the time of inflation, and it may buy government securities in the time of slowdown. Next is Long-Term Repo Operation, LTRO. Under LTRO, RBI provides longer-term loans to banks at the prevailing repo rate. As banks get long-term funds at lower rates, they reduce interest rates for borrower and to help the economy grow. Next term is bank rate. It is the rate at which RBI is ready to buy or rediscount bills of exchange or other commercial papers. Current bank rate is repo rate plus 0.25% is equal to 6.8. Next term is Marginal Standing Facility, MSF. MSF is the panel rate at which banks can borrow on an overnight basis from the RBI by dipping into their SLR portfolio up to a predefined limit, 2% of the NDTL. And the current MSF rate is repo rate plus 0.25%. Keep watching, keep growing.